Hello, everyone, and welcome to the Money Flow weekly market newsletter. I'm your host, Dr. BJ Love, and I'll be bringing you this week's update. Here at Money Flow, we use time-tested methods and indices and indicators that helps us to navigate these markets with confidence, clarity, and comprehension. Now, the weekly market review and forecast for the closing bell on Friday, March 13th, 2026. Uh, we had for the market overview, we can see that stocks suffered third straight weekly loss. Now, we're going to talk about what to look for in this session. Now, U.S. equities closed lower last week, marking three consecutive weekly declines as investors reacted to rising oil prices and geopolitical tension in the Middle East. Higher crude oil prices have raised inflation concerns and increased volatility across global markets. Now, the VIX, aka the fear gauge, is sitting around 27 right now, above that threshold of 20, as we reiterate each time we broadcast this report. It signals elevated risk appetite and hedging activity as institutions brace for political macro shocks. Energy prices briefly pushed above $100 per barrel amid supply concerns tied to the Iranian conflict, reinforcing inflation fears and pressuring equities. Now, the major indices closed on Friday, March 13th, 2026. The Dow Jones Industrial Average closed at 46,558. The S&P 500 closed at 6,632. The NASDAQ closed at 22,105. The Russell 3000 closed at 3,767. Again, the CBOB or the Kobe CBOE or the Kobe Volatility Index closed at 27. Now for cryptos and commodities, West Texas crude oil closed at, like we said, it did touch $100 a barrel, but it settled at $98.01. Gold closed at 5,020. Silver closed at around $80, and Bitcoin inching up. Seems like every week we'll wait, watch, and see if this is a bottom for Bitcoin. It closed at 71,364. Now our sector leadership came from, our sector leadership has shifted toward defense and energy related sectors, while high beta growth stocks like those in the tech sector remain volatile. Leading ETFs and sectors are energy. The ETF is XLE, and it has strong momentum as oil prices surge and energy producers benefit from supply disruptions. Now, the utility sectors, the XLU, defensive inflows. I mean, money is flowing into this sector as investors seek stable dividend yield during the volatility. Also, we have the XLI or the industrial sector. It is supported by defense spending, infrastructure projects, and reshoring of manufacturing supply chains. Now, with these sectors, oil and gas exploration, power utilities, and industrial infrastructure companies have shown the strongest relative strength so far. Now, here's our institutional watch list that we have devised for our readers. This is what to watch. And we're going to look at some of these also on the chart. Now, showing the strongest relative strength, unusual volume, and institutional accumulation. Remember, we as retail investors do not move the market. What we do here at Money Flow, we follow what we call the smart money, the institutional investors that actually move the market, and we invest in those stocks that we see that they are being accumulated. We have a way that we can tell when these what we call institutional institutional investors, where they leave what we call elephant footprints that we can read and we can verify and say, okay, if they're buying these, I'm going to be buying them as well. So that's what we teach here at the Money Flow Market Review and Forecast. So our first ticker is Nokia. Nokia is a AI infrastructure network company. We see lots of money flowing into that. People are building the large companies are building data centers and new AI network infrastructure. We also have a company called ET Energy Transfer. That's one of the leading sectors there. Energy. They are LNG export infrastructure. LNG stands for liquid. Uh, Liquefied natural gas. That is what that stands for, and that is one of the stocks that we hold as well here at Money Flow. Also, there is Frontline. Frontline has oil tanker surge. They take the oil or the refined gas and they transport it from point A to point B. Now that again is a energy sector stock. And then we move on to the precious metals. Our play that we like is New Gold in precious metals. We've seen that they have taken a hit here over the past few weeks. However, they are still in a long-term um, structure that is positive. And here we like to say that long-term trends dominate, short-term trends fluctuate. So you may see a short-term pullback, as we call it, in the precious metals, in gold and silver. However, we're going to wait, watch, and see when that bottoms. We're positioning ourselves to be in place for that rebound. Also, we have SVM, a silver core metals. We'll show that on the chart. It has silver strength. Again, it's in a long-term uptrend and a short-term downtrend. And then we have in our utility sector, a company called PG&E. The symbol is PCG. And as we saw that the XLU or the utility sector is having new money flow into it as a defensive structure. So investors have more stability. They are more stable companies. Plus, they usually pay a nice dividend. And our last one that we have here is United States Antimony. And you say, well, what is antimony? That is a critical metal. That is those metals like zinc and oxide, and they also and nickel and cadmium and things of that nature. Critical minerals that are needed to manufacture defense mechanisms, planes, submarines, and ships. Now, with the strategic view here, the market appears to be entering into a volatile consolidation phase where leadership rotates toward, again, the energy, utilities, and infrastructure plays while investors selectively accumulate AI network infrastructure companies like Nokia. And we're going to see how they are performing right now. So if you find this report valuable, share it with another investor and subscribe for weekly market intelligence sector rotation analysis. That is what we do here. We do it for you, and then we present it to you and high probability trade setups. Now, we believe that volatility creates opportunity, but you must be prepared. So we try to get you ahead of the curve. We are ahead of the curve. We see what the major institutions and pension funds and hedge funds are buying quietly while we go through this phase of volatility. And like we always say here, the goal with charting, and that's what we do here. We pride ourselves on accurate charting. The goal with charting is to separate the signal from the noise. So we just want to show you the signal and we're going to buffer out the noise. Now, this is prepared for client distribution, the clients um, of Money Flow, and not investment advice. This is for educational purposes and information purposes only. This is for educational and information purposes only. Now let's move into these charts real quick, and we're going to see what the large scale uh, indices are doing on a long-term basis. We're going to look at our major indices, and we're going to go ahead. You see that we have the on our four grid. If you've been with us for a while, you're familiar with that. We have our S&P 500, we have the Dow Jones Industrial, we have the NASDAQ Composite, and then we have the Russell 2000 as well. So we're going to go ahead and maximize this chart. And as we can see, if you've been with us for a while, we have a proprietary software that lets us know if we are still in a bull market. So we have a green background. Again, this is our long-term view. Short-term, been very volatile. They have pulled back. You see here the high over here on the S&P 500 of about 7,000, and ever since then we've been pulling back. But our primary methodology here is as long as this price bar stays above this moving average, that's our gray line there, our line in the sand. We do see that our accompanying indicator shows that this is a top, and it's being very accurate right now. It showed when the vertical crossover went down, and it's showing negative. The S&P 500 has not been able to move out of this particular consolidation. It's just kind of in a sideways move. So now we're going to move on to the Dow Jones Industrial, and as you can see, it has fallen as well over the past, as we mentioned in the introduction. For the past 3 weeks, it hit our moving average, and it has since bounced off. We are still above this moving average, and we still have a green background. So therefore, we concur that the long-term trend of the Dow Jones Industrial is up. You can see where we have our confirming trend here, our MACD. It has turned negative, and that's indicating that this could be, not is, but could be a turnaround for the Dow Jones Industrial. But however, as we saw on the S&P 500, as long as this MACD stays negative, the indices just kind of, goes range bound. It tops out, but has not really broken that long-term trend. And we go here to the NASDAQ. We see a similar pattern. Our confirming indicator MACD, which is very, very giving us a very good signal right now. And what is it doing? It is just continuing to fall negligibly, but staying above that rising moving average that we like to see to determine if we are still in a long-term uptrend. And then with the Russell 2000, you see a similar pattern. So what is our takeaway? With four indices having green background, it shows that we are still in a positive long-term uptrend, even though we have short-term fluctuation. So what we want to do now, we want to flip, and we're going to look at our flip, and we're going to look at our stocks that we mentioned, and we're going to look at our sectors. Oh, here we go. Here we go. Boom. And we can see here, we looked at the strong sectors that we had, and that was the XLI. And as we can see on a weekly basis, it has been going up. We did have a little bit of a pullback, but we're still above that rising moving average that we like to see. So it is a strong sector. And we're going to look at the XLU. And this is on a weekly basis. And as you can see, it's been going up all of this week. So that's a strong sector. That's why we're in that sector. And we're going to look at we got to look at it real quick here. The XLU, the XLE, the energy sector. And the energy sector is very, very strong, very, very strong. So one of those stocks that we want to look at is Nokia. Boom. And this is our AI play that has been doing very well for us. And with that said, out of time, we're going to say every day and every way, we get better and better every day. And every way we grow, more prosperous, successful, and victorious. And God loves surrounds us and folds us and it wraps us